Okay, guys, let's continue the lecture. So, this was the accumulated depreciation. Now, at the end of the life of the project, we have to check whether we have used the whole cost we have allocated whole cost to depreciation, or there is any value of the asset remaining. One is salvage value that is given in the question here. The salvage value of the asset. Salvage value mean terminal value, residual value means if I sell this asset at the end of the 6 year, it has a market value. I can sell it for 102 million dollars. So I have to check what is the book value. So what is the formula of the book value is, it is here cost minus accumulated depreciation. This is known as book value. So what is cost? It is 150 minus 37.65. So what is the value? 30, after doing this, I get the value of 150 minus 37.65. So the book value is 112.35. So here I can analyze that it has a higher book value. Its book value is higher than the salvage value. So this was our aim to find the book value. We will use it. And the first thing is depreciation rate, expenses that we calculated. We also have to use it. Now, here in the main question, if we go again, here we'll write the first thing that we have calculated. It is depreciation expense and which factory. You can also write the building. So what are the values? 3.9, 7.5. Here I will write 3.9, 7.5, 7.05. I think 6.75, 6.50, and here it is 6. Let me check again. 6.45. Here it is 6. 6.45. So this was the depreciation expense of the factory. Now, in the next point, we have the company must immediately purchase equipment costing 15 million. Freight and installation of the equipment would cost 5 million. The cost of the equipment, freight installation was to depreciation on 5 years macro basis. Depreciation percentage for the next years respectively were 20, 32%, 19, 12, 11, and 16%. It was believed that the equipment could be sold for 3 million. Now this 3 million, it is the market value of the equipment. Now equipment actually cost 15 million, but the freight and installation cost is 5 million. So I told you, as well as you already know, got this thing in the course of cost accounting, that freight, transportation costs, installation costs, material handling costs, they are added in the project cost. They are added in the uh, product cost. So here it is equipment. So the cost of the equipment will be. Now we have to revise the same process for equipment. Now the cost is 15 plus 5. The total cost is 20 million. Total cost is 20 million. So again, we have to write depreciation rates, and here we write depreciation expenses, the time frame 1, 2, 3, 4, 5, and here it is 6. The rates are given, it is 20%, 32, 19. So let me write, it is 20%, 32%, 19%, 12%, 11%, and I think it is 6%. So you have no need to memorize these rates. These rates will be provided whenever you will get the question, and the question states that you have to use Macker's class. It will be given. I told for 5 years Maker you will be provided with the 6 year because of the because of the fiscal year that the companies use from 1st July to 30th June. So here I can directly calculate because I know this is 20%, 20%, 2 multiplied 2, 4, and 0 cancel. So here I get 4. Okay, I have no need to use the calculator. So when you solve this question, you also try to get the now 2. This will be 6.4, and it will be 19. This will be 3.8. This will be 2.4. This will be 2.2. This will be 1.2. So I have no need to use the calculator because the rates were same. For example, 6%, 6 multiplied with 20, I get 120. So 120 divided by 100, I get 1.2 directly. I can solve it without using calculator. So you can also try the same thing when you are solving this question. Now let's calculate its accumulated depreciation. Now how we can find accumulated depreciation again? It is sum of all years depreciation expenses. So add them, you will get 20. So it means its book value is equal to cost minus accumulated depreciation. Its book value is 0. Its book value is 0. Yes. So first we will use the data here. Now I will write the depreciation expense, and it is for equipment. Here it was 4, then 6.4. I will use the data that you provided. 6.4, 3.8, 2.4, 2.2, and 1.2. So till this point, my cost part is also completed. My cost part is also completed. I have to make some amendment here. Now this is cost, and these two are depreciation. So what is formula? If I write, so sales minus cost minus depreciation. So I will mark a line here So what we have to do, we have to subtract each year sales, that is net sales, each year expenses and depreciation from the net sales. So yes, exactly, sales minus cost minus depreciation. So find it. I will start from the first year. You have to start from the last year. 103 minus 56.65 minus 7 minus 2 minus 25 minus 3.9 minus 4. So I get the value that is 4.45. This is 38.15. This is 42.6. This is 75.05. And this is 50.5. And last one is 15.37. We write it 15.38. Okay, guys. So till this part we have applied the, now this is earning before tax, and we can also name it as operating income before tax. So here we will apply tax, that is given, that is 40%. So 40% of this value, 40% of this value. Are these tax values 3.11? 40% of 4.45, oh, it can be 3.11. It is 1.78 minus 4.45. Check it again. There is, yes, 1.78. So it is 1.78. It is 15.26. इसे check करें तो 17.04, 30.02, 20.02, and last one is 6.15. Now I have one way to check it. This is very important because I expect when you are doing this question on exam day. Now, if this is exam 100%, this is 40%. The 40 party we are deducting it, so we will get 60%. So this value, whatever will be the remainder, it must be 60%. It must be 60%. So here we will write earning after tax. So if you directly multiply, you will get the same value. For example, multiply 4.45 multiply with 0.6. It is 2.67. If you subtract, you will get the same value. So how I'm doing, I will multiply 60% because 40% we have to deduct from 100 value percent. The remainder will be 60%. The value will be 60% of the actual value. So if you multiply 60% with these values, you will get the answers here. Try it. 38.15 multiplied with 0.6. So it will be 22.89. 42.6 multiplied with 0.6, it is 25.56. 25.56. And here it is 30.3, 45.9. 0.03, and here it is 30.3, and lastly it is 9.22. So you can, by this you can check your answer that you are not doing something wrong for tax. So till this part we have calculated the tax as well. Now what we have to do, the last part, we have to add back the depreciation expenses. So if I say I visualize here, this is 7.9, this is 9.13, this is 85.10.85, this is 65.8.65, this is 56 point, this is 8 point, no, this is 7. So here I made a mistake. This is 5.9.15 and this is 7.2. Yes. Now I will mark one more line here. Now after deducting it from this depreciation, adding back this, we will get after tax operating cash flows. This is we need after tax operating cash flow. So by adding them, you will get your answer, that is 2.67 plus 7.9. It is 10.57. Yes, adding them. This is, please don't round it to 22.89 plus 13.9. So it is 36.79. 36.79. 25.56 plus 10.85. So this is 36.41. And then 45.03 plus 9.15. This is 54.18. Yes, exactly. 30.3 plus 8.65. This is 38.95. And last one is 9.22 plus 7.2. 16.42. 16.42. So this was the question, how to find the after tax operating cash flows. Now for the remaining two parts, okay guys, right now I hope you all are listening to me. There are 23 students. Mark your present in the chat. Write present. Okay, everyone just write present in the chat. So if you don't write, I will not mark your attendance. It is mandatory for everyone. Just write present. That's it. So those who will write present, their present will be marked. Now we have to further solve this is after tax operating cash flows. So here we have to find the net working capital. Net working capital. So for this, there is point number 7 given. In order to manufacture sneaker 2013, let me draw the timeline because here it is 1, 2, 3, 4, 5, and 6. So the data is given about this is 0, account receivable, inventory, and accounts payable. These both are non-cash current assets, and it is non-cash current liability. So as per the question, if you read this question, here it says approximately 15 millions of inventory would be expected needed quickly to fill the supply chain, and accounts payable are expected to increase by 5 million. So at point 0, we need 15 millions inventory and 5 millions accounts payable. And then we are given with the value that further account receivable will increase by 8%. Accounts will be 8% of sales, that is net sales. Inventory would be 25% of variable cost, and accounts payable will be 20% of variable cost. Now the assumptions of working capital management, net working capital investment is that it will be recovered at the end of the project life. So at this point, the account receivable, we don't need account receivable at point 0, so here it is 0. But for the remaining years, it is stated that by the end of 2013, the account receivable would be 8% of project revenue, the inventory balance will be 25%, and accounts will be 20% of project revenue. So again, we have to use the data of the sales. So how we can find? We have to multiply 8% with each year sales. Which sales? Net sales. So we will get account receivable value is 8.24, then 12.88, 22.08, then 16.56, 8.28, and for this we have to place 0 because at the end of the investment, this is the period where we have to recover our investment. So for 5 years we have to accumulate. Okay, here it is 0, everything will be 0. Okay, this is our terminal year. So inventory, it is 14.16, 23.23, 22.14, 37.95, and 28.46. So here the value here is written 14.23. We will not use it. Earlier I think we made a mistake. At the end, that is terminal year, it must be 0. So in every question you can write the same thing. Okay, when you are calculating the working capital management, yeah, because we have to recover the amount 11.33, 18.59, 17.71, 30.36, and 22.77. 22.77. Now what we have to do after finding the values? We just have to subtract them. What is the formula? It is non-cash current asset minus non-cash current liability. So for first years, this is working capital. It is 10, 15 minus 5, 15 plus here, negative. So add them, you will get the values and then subtract it. So 8.24 8.24 plus 14.16 minus 11.33, it is 11.07, it is 11.07, then 12.88 plus 23.23 minus 18.59, so we get 17.52. Then 20.8 plus 22.14 minus 17.71, it is 27.23. Then 16.56 plus 37.95 minus 30.36, we get 24.15. Then 8.28 plus 28.46 minus 22.77, so we get 13.97. So we need change, that is net working capital investment. How we get it? It's simple. You have to start from 0. Just suppose here it is 0. 0 minus 10. So here you get minus 10. The flow is this: 10 minus, I will just put for illustration, 10 minus 1.07, this is minus, then 11.07 minus 11.07 minus 17.52, this is 6 minus 6.45, then 17.52 minus 27.23, we get minus 9.71. We get, here we get positive 3.08, and then 24.15 minus 13.97, we get 10.18, and here 13.97. So this is our net working capital investment. So going back to the question for the remaining part, so here we can say the fixed capital investment, it is at 0.0, it is, we bought the factory at cost of 150. We place negative sign because we have to show it is at the initiation, and then equipment, it was minus 20, and then net working capital investment at the 0.0, it is minus 10. Okay, we have 10 minutes. Now, last part, that is after tax salvage value. So here we will write TNOC, terminal year non-operating cash flows. Here it is, first I will write net working capital investment, that is change. So far, first year we have incorporated, then it was minus 1.07. Here I will write minus 1.07 minus 6.45 minus 9.71 3.08 10.18 and lastly it was 13.97. So after tax value, we have two things. One is factory and other one is equipment. We will talk about project in next class. Okay. Now here I will find the after tax after tax salvage value. First one is factory. So for factory the salvage value is 102. The book value is it was 112.35. Here it is 112.35. So we can compute formula is salvage value minus tax into salvage value minus book value. So salvage value is 102. It is equal to minus 0.4. That's it. Tax 40%. 102 minus book value 112.35. So here we get 102 minus 102 minus 112.35 multiply with 0.4. So it is minus 4.14. So 102. So we get 106.14. So we will put here be careful, we have to place in the last part 106.14. 106.14. Yes, exactly. Now then here we will use the equipment. For that salvage value is 3 million minus 0.4. 3 million minus 0 because book value is 0. So 3 minus 3 1.2. So it is 1.8. It is 1.8. Yes. So here we will write 1.8. So after this our question is complete. Now if you add you will get project after tax incremental cash flows. So from where you have to start? You have to start from here to here. You have to add values. For example, the first one is minus For the first one, it is minus 180, and for the second one is it is 10.57 minus 1.07. So you get 10.57 minus 1.07, you get 9.5. Here you get 9.5. Then you get 36.79 minus 6.45, you get 30.34. Then 36.4 minus 36.41 minus 9.71, 26.7. Then 54.18 plus 3.08, because of positive error, so 57.26, 38.95 plus 10.18, you get 49.13. And here you have to add all 16.42 plus 13.97 plus 106.14 plus 1.8. So you get 138.33. So these are the cash flows that we have to use further for project evaluation. Okay. So this was the topic how we can find after tax incremental cash flows from cash flows. I will upload the file on Moodle. You can download this file in Excel form. You can see the lecture, as well as I will share the video and audio links with you guys. So here we end the session. In next class, I hope you will be experienced and learn the capital budgeting, so I can ask some questions regarding the capital budgeting. So in next class we will see what we can do. We will talk about the project, how we can do the projects. Those who sent me emails, I will reply today, because yesterday I had no time because of 2 consecutive classes of 4.5 hours. So today inshallah I will reply, and I hope you all are doing the project and try to learn, put maximum efforts in your project, because it's very important to learn the practical things from practical aspects. So those who send me email, I will reply them today. See you next class. Any other students who didn't mark is present in the chat, he can send me message right now. So for this, today the session is over. See you next class. Allah Hafiz.